All right, it is Friday, and as you know, on Friday we do the Friday financial wrap up with Mr. Michael Zuber. How you doing, Michael?
Oh, I'm doing awesome. I just simply love the fact that we're doing this from the car. It's that important to get this information out. So thank you for doing this. I think this is awesome.
I love it. I also have a special guest in the car studio. Happy Saturday. Let's go.
Oh, the dynamic duo. I love you both. That's awesome.
I love it. I love it. So let's get right into it, right? Very interesting. A lot going on in real estate. It's interesting. We had a meetup last night, a real estate investor agent meetup, and everybody has figured out the real estate market is shifting. So let's get into it. You've been talking about this for the last year, especially the last 6 months. What happened this week with existing home sales, Michael?
Yeah. So just so a lot of people may not be aware of this, when you talk housing market, there really are two buckets that everything get put into. There's existing home sales and there's new home sales. We got numbers on both this week. And the reason this is important is existing home sales, roughly speaking, are 90% of the market. New home sales are 10%. Again, rough numbers. So existing home sales, far bigger, far more important. We had numbers reported Tuesday. Not surprising to anybody that follows my content. Transactions down, price up, right? That's kind of what I've been telling you. What we need to realize is the closings. This was May closings for reported in June. Interest rates were not yet at their peak because the contracts were probably signed March and April. They were certainly up. They weren't 3%, but they also weren't 5.5% or 6%. So existing home sales went down about 3.5% or 3.2%, something like that. But median home price, which is what I keep telling folks, nationally speaking, broke 400,000, was up 14.8% or something like that. Again, the Fed broke housing. It's a market that none of us have seen since the early 80s. The low end is white hot. The move up buyer is broken. And again, transactions are going to fall. This is the second month in a row, I believe. They're going to go down 25, 30% for the year. If your business is based on transactions, agent, brokers, mortgage brokers, inspectors, appraisers, landscape, just any of that stuff, plan, go look at your overhead, go figure out what's going on, get right sized for winter. Now, right? It's late. It's late because it's coming hot, fast, and hard. But yeah, I think people are going to be shocked that median home price doesn't fall this year. We'll talk about next year. But given what I see, these hopes for a housing crash of 30 or 40% in price are not going to happen nationally. Could they happen in some pockets? Sure. But I even think that's, it's getting pretty close to the end of the year, right? You pretty much have to sign a deal in October to close in December. So it's going to be interesting. I don't think the big housing price crash that people are talking about is going to happen in 2022 in most markets.
Very interesting, Michael. Very interesting. Definitely, we're noticing a slowdown for sure in inventory. Starting to see a lot of price reductions. So let's talk about new home sales. What did you see this week with new home sales?
Yeah, new home sales, right? New home sales is really interesting because we came off an April reading that was beyond horrible, right? I'm going to go from memory here. I think April numbers, the expectation was like 712 and it came in at 591. So it was a huge miss. It gave a lot of channels the FUD, fear, uncertainty, and doubt that they could say housing crash is imminent. Nobody's buying new homes. The interest rates this, interest rates that. Lo and behold, the May numbers come out and the May numbers are up and they beat expectations. And we raised April's original numbers from 591 to 629. So still bad, but up, I don't know, 5, 6, 7%. So new homes still selling. And we had KB Homes and Lennar report this week. Both beat earnings, both beat revenue, both said, hey, we're going to keep our forecast the same. So I think what you're seeing in new home sales, frankly, the reason they're up in May over April is builders are frankly smarter. They are managing cash flow better. Builders have already taken price drops. Not a lot, but some, 5, 10 grand. They're paying points. They're paying closing costs. Builders are blowing out inventory now because, again, a builder, when they blow out a community, right, that's 6 months of commitment. So they're going to blow out these commitments, get the deals done, get smaller so they can have more profit. I think builders will be profitable Q4, Q1 because they're actually going to do less. And I think it's going to drive people crazy. So yeah, new home sales were up and up quite significantly.
Very interesting, Michael. Very interesting. So obviously we're seeing the change. We're seeing the shift. We're seeing a slowdown. Talk about mortgage applications. What happened this week with mortgage applications?
Yeah, another surprising twist. Mortgage applications for purchase were actually up week on week. They were up 8%, which again goes against the narrative of everything's going down and nobody's going to buy a home. And it's just not. Homes will still be sold. People will still be buying. I would tell people today, as a buyer, that you have the power. If you're a buyer today and you're paying over list, mistake. If you are a buyer today and you're not getting closing costs paid by the seller, mistake. If you are a buyer today and not getting the seller to buy down your rate, mistake. Buyers, you have all the power. Use the power. Get your rate down. You get your rate down 0.5 point. That's real money every month for the next 30 years. Closing costs. Get someone else to pay for it. Why not? You've got the power. And then finally, why the hell are you paying list price? But yeah, mortgage rates are up 8% week on week, which is, I think, shocked a lot of people.
Yeah, that is shocking. That very interesting times what's going on. So let's close out. Let's talk about Las Vegas. What did you see this week in Las Vegas?
Yeah, so I'm lucky enough to have relationships with key brokers across the country. And one that I've been speaking with for 3 years now, his name's Brian Lebo in Vegas, has a great channel. I think it's called the Lebo Group. But anyways, the reason he's great is he puts out weekly content, data, right? Data-driven, listings, closing, prices. And he's been doing it for like 12 years or some amazing streak. So shout out Brian Lebo. But the reason Vegas, and this might just be my opinion, but I've always looked at, so I've never bought in Vegas, don't have any rentals there. What Vegas is for me is it's the canary. It's the canary in the coal mine, because in my world, it's the ultimate boom bust market. It moves first. It moves big time. And what's happening in Vegas, right? Brian Lebo and I talked this Wednesday, and what Brian basically told us, simply said, is the party's over. Brian's been telling us for 3 years, everything's fine, everything's fine, everything's fine. And then this week, party's over. Inventory went up 10.4% in a week. A week. That is bananas. For a market that has over 4,000 listings, to see it go up 10% in a week is bananas. So again, fear of missing out from the buyers, FOMO, wish pricing. We have all the stuff that we've talked about. Vegas is the canary. I think Vegas is going to be fundamentally different in 6 to 8 weeks. We're not going to know. I'm not calling a price drop. Let's be very clear. I'm calling transaction crash, decimate. You may have some pending, but wish pricing and all these things. I think Vegas is telling us real estate's going to change, just as I called, transactions are crashing. So Vegas is the canary, and I think the canary just died.
You heard it here, folks. The canary in the coal mine, it just died. The party is over, but let's talk about, Michael, what does that mean to the one rental at a time investor? What does that mean to the one rental at a time audience in terms of opportunity? How would let's close on a high note. What is the opportunity?
Well, I think that's, I'm really glad you went there, because that's what I'm trying to get people to realize is, if you're a real estate investor, you have been begging for a housing slowdown, right? Speed was the only way we could get deals done in cash. That market is definitely different. Real wealth is made in recessions. Real wealth is made when you can listen to the seller and meet their needs. It's not always price. So what I'm telling folks, and I'm doing it, right? I have new marketing material right in front of me on postcards that we're mailing. I am mailing out a postcard hinting, saying, housing crash coming, ? I'm going to be motivating. I'm going to be mailing to sellers with 60% equity, because I'm going to run the 50-40-10 program all day long. I'm going to get sellers to carry 40%, get a 50% note. I'm going to get properties with 10% down, which is crazy, because today most people think you need 25. I'm going to do it routinely with 10. I'm going to get sellers to carry 40% at 1, 2, or 3% for 10-year balloons. It's going to be amazing. I have the right mindset. I'm spending thousands of dollars marketing to sellers. I will be better off after this recession than before. I know that every time I see a bad headline, Meet Kevin today put out, he's got 1.8 million followers. His title was Housing Depression. I love that stuff, because every time people do that, I always say, there goes 2% of my competition. So folks, watch Meet Kevin, watch all these other channels to get scared, do nothing. And I'm going to go clean up because I'm going to do great deals. I'm going to do deals in the next 2 years that were just simply not possible in the last 2. So let's go.
Let's go. I love it. Thank you, Michael, for all that you share. And I completely, Adrian and I are here. Adrian.
Yeah, that was good, dude. Spot on.
So spot on. And this is the time we've been waiting for, folks. This is the opportunity. This is the moment we've been talking about, that we've been preparing for. This is the opportunity. Is the market going to crash? No. Are we going to see price reductions? Yes. Is there opportunity? Absolutely. This is the time. So I want to encourage people. We're doing an event August 11, 12, and 13. Michael is one of our keynote speakers. Michael, just maybe, what are some of the things, like when you come, what are some of the things you want to share with people at the RE hybrid event? Just a little teaser.
Yeah. So if I was going to tease something, what I would tell people is the last 2 years has been a great time to have high income. The next 2 years, it's time to get wealthy. I'll leave it at that.
It's time to get wealthy, folks. So if you're interested, please go to rehybridevent.com. Also, too, as a bonus for the listeners here, we're going to give Michael a discount code to post in his YouTube. Also, in our Facebook posting, there's going to be a discount code in the comments. So use the discount code. It's probably going to be good for about, I would say, again, 2 or 3 days. We have a limited amount of seats. We want to make sure we want to sell this thing out. We're going to sell this thing out. Thatch Nguyen is going to be one of our guest speakers, Jeff Quinton, and then none other than Mr. Michael Zuber, talking about the opportunities and that right now is the time. Michael, thank you for all that you share and do. Have a great weekend, brother. Thank you.
Thanks, buddy.